Hey Puppy Trades, I wanted to do a video analysis update on my top 5 stocks to buy and hold for 2021 and beyond. Now another cool thing about this video, besides the fact that it is a very long-term investment video, is that the 5 stocks that I'm going to go over have a lot of diversification. So when we talk about portfolio theory, one of the best ways to protect yourself from risk is to diversify, okay? Not just diversifying in sectors, but diversifying in market capitalization and diversifying in the age even of the stocks that you're investing in. So I believe right now that these stocks are really good long-term investments, and they're also really good stocks to think about as a group because a lot of these stocks don't have anything to do with each other. This first stock we're going to go over is Pfizer. It's an American pharmaceutical giant. It's been trading since before 1990. Okay, some of the stocks I'm gonna go over have only been trading since October. Okay, so we have a lot of diversification, not just in sectors, but in market capitalization and in the age of the company. And we are going to get right into it. Okay, so this is Pfizer. This is an American pharmaceutical giant. I believe it has a 1, 2, 1, 2 nest completed in Elliott wave theory. So in Elliott wave theory, a nest is a 1, 2, 1, 2. And if we look at this, this stock has been basing or consolidating for almost 20 years. We've seen the stock move basically sideways. That's building up energy for a huge move and a sustained move, which will be, in my opinion, to the upside for the next couple of years, even the next decade. Okay, so when we talk about long-term investing, I really like Pfizer right here as a 1, 2, 1, 2. We take the beginning of wave 1, connect it with the high of wave 1 and the low of wave 2. We have a gorgeous Andrews pitchfork with really nice reactions on this median of the pitchfork, and now really nice reactions on the lower bound of this pitchfork. So the idea of the pitchfork is that if you have a completed 1, 2, you can take the beginning of wave 1, connect it with the high of wave 1 and the low of wave 2. You're gonna have a really nice Andrews pitchfork setup, and reactions on the lower bound act as buying opportunities. And then the idea is that the price target is then the median of this pitchfork. So if we look at Pfizer right now, we have a 1, 2, 1, 2, and this is going to be over 20 years of basing right here. So I really like this play. Long-term, Pfizer also has a 4% dividend. So that's a really interesting thing about this stock too, is that it's a chance to lock in a 4% dividend at 36. Okay, and we're going to go over price targets right now. If we believe that this is a 1 and a 2, then the target for wave 3 is at minimum the length of wave 1 places the wave 2 low, and that will give you a conservative target because the wave 3 target is actually 1.618 times the length of wave 1. Then you have a shallow wave 4 correction, and then a wave 5 higher, which is at least the length of wave 1. So the wave 3 target is 62. Okay, so I believe likely by the end of 2021, we're going to see Pfizer around 60, 62. And that's going to be our wave 3 target. But remember, that's a conservative wave 3 target. And also, it's only wave 3. Longer term, we're expecting Pfizer to complete a wave 5 higher as well. So I believe long term, in the next 3 to 4 years, we're going to see Pfizer trade all the way up in the 100 area. So my long-term price target for Pfizer is 100. My 2021 price target for Pfizer is 62. Okay? We take the length of wave 1, we place it at the low of wave 2, and we're targeting the median of this pitchfork, buying off the lower bound. Okay? This projection will be invalid if 27.88 is ever broken. Okay? So if Pfizer's above 27.88, long term, as a shareholder, I'm expecting it to go all the way to the median of this pitchfork, reach 60 conservatively, likely by the end of 2021, and then even go further to 100 in the next 3 to 4 years. So I really like this as a long-term cornerstone investment. And the other cool thing about this video, the other stocks that I'm going to go over have absolutely nothing to do with large American pharmaceutical companies. Okay? Let's get into our next stock. It is Camping World. Camping World is a very, very nice setup. This is probably, if there was going to be a shorter term setup in this video, it would probably be Camping World. But I really like this stock too. It has a wave 1 and A, B, C correction, and it's put in a wave 2 right here. So this projection is really nice, honestly, in the medium term and the long term, because we see that if 22.60 holds as the low, we've just put in a wave 2, and we were expecting a wave 3, 4, and 5 higher to the upside. So I really like this. It's a wave 1, an A, B, C correction, wave 2. If you're a classical trader, you're just going to call this a bull flag, okay? No need to argue with the wave count because this is just a bull flag, okay? Wave 1, A, B, C, wave 2. We see these really nice reactions on the median of the pitchfork. So a lot of people ask me, what do I mean when I'm talking about reactions on the median of the pitchfork, okay? When I'm looking for a reaction on the median of the pitchfork after connecting the beginning of wave 1 with the high of wave 1 and a low of wave 2, I'm looking for what I call uncanny reactions on the pitchfork, okay? You see how the high of this daily candle hits the median of this pitchfork, gets rejected, and goes down, okay? I really like seeing wicks that form on the median of the pitchfork. I really like seeing clear reactions on the lower bound of this pitchfork. So right now, if Camping World is above 22, then I actually think in the first half of 2021, we are going to see this massive move in Camping World all the way to 61. So I definitely think by the end of 2021, Camping World is going to reach 61. I think it could happen by June, okay? And that comes from taking the length of this move in time and price and placing it at this low. So this is wave 1. That means wave 3 is bigger and faster than wave 1, okay? So this is actually a conservative target because wave 3 is actually 1.618 times the length of wave 1. So if Camping World is above 22, then I'm expecting that we have a really nice pitchfork right here found by connecting the beginning of wave 1 with the high of wave 1 and the low of wave 2. We have really nice reactions on the lower bound of this pitchfork. We have really nice reactions on the median of this pitchfork. And this is also a perfectly valid setup from a classical trading perspective, right? So you don't even need to believe in wave theory for this one because this is simply a bull flag, okay? But long term, if we see that Camping World is going to go on a wave 3 higher, that means we're also expecting a wave 4 sideways, a shallow wave 4 correction, and then a wave 5 higher, which is at least the length of wave 1. So if Camping World is above 22, I'm expecting very conservatively by the end of 2021 that it will reach 61. I think that could happen by June, to be completely honest, because the length of wave 1 in time and price is the minimum projection for wave 3 because wave 3 is larger and faster than wave 1, okay? So if we have 22.60 hold as the low, I'm expecting Camping World to reach 61 by the end of 2021. I think aggressively, it could reach 61 by midway through 2021. And then long term, we take the length of wave 1, we put it at the wave 2 low, and that's just going to give us wave 3. We would still be expecting a wave 5 higher, and that would take Camping World all the way to 100. So both Camping World and Pfizer, I'm expecting in the next 2 to 3 years, I think 4 years at the max, we're going to see both of these stocks go from, the 20-30 range all the way to 100. Okay, so I really like Camping World and Pfizer as two cornerstone investments. Obviously, this is not investment advice. This is just my personal trade journal. But I really like Camping World and Pfizer together because they have nothing to do with each other, right? One's a large cap American pharmaceutical company that's been trading before 1990. This is a company that makes RVs, okay? So we're talking about diversification in the outdoor sector, okay? And we're also going to talk about another stock that Camping World is getting into because Camping World is also a quasi-play on electric vehicles, and that's going to bring us to this stock right here, which is Lordstown Motors, okay? So Lordstown Motors and Camping World actually have a partnership. Camping World makes RVs, and Lordstown Motors and Camping World are partnering together. So I will say that Camping World and Lordstown Motors do have some sort of relationship, okay? But let's look at Lordstown Motors right now, and I want to take a little time to talk about the electric vehicle sector, okay? So the way I view small cap electric vehicles right now is very, very similar to how I believe e-cash was and the electronic cash sector was in 2015. I think we're seeing a lot of stocks that are going to be future PayPals and future Square Cashes and future Shopifys, where these stocks are going to go from $20, $30 to $200 $300. And if that sounds crazy, then, you need to get in the 2020 market, okay? There's no such thing as crazy in this market anymore, okay? And these electric vehicle companies, I think right now, investing in small cap electric vehicle companies like Ride, Nikola, we're going to go over Li Auto next, Foov, Acromoto, these stocks are going to be what eCash was in 2015 and 2016, okay? I think these are stocks you buy and hold, and it's not out of the question that you make 10 times your money on shares, okay? And what happened is because you have these small cap electric vehicle companies, you have a much higher potential return because a lot of these small cap electric vehicle companies haven't even been trading for longer than a year or two, okay? So in general, the more recent the IPO, the higher potential for return, okay? And so what I'm trying to get at is that these electric vehicle companies that I'm going to go over, they've only been trading for less than a year for the most part, okay? So in general, if you're a long-term shareholder, a long-term share investor, the quicker and more recent the IPO, the higher the potential return. The analogy that I'm trying to make right now is I believe small cap electric vehicle companies like Ride, Lordstown Motors, Li Auto, Acromoto, Foov, and Nikola, we're going to see these stocks go from 20 to 100 to 200, in the next 4 to 5 years, okay? And if you think that's outlandish, look at the charts of Square Cash, look at the charts of PayPal, look at the charts of Shopify. I mean, these stocks went from under $50 to, some of them are over $1,000, okay? So let's just get right back into the technical analysis. With that being said, I just think that small cap electric vehicles are what, Google and Apple and Microsoft were in the early 2000s. I think that they're what Square Cash and PayPal and Shopify were in 2015, okay? So we have a wave 1 for Ride, a wave 2, and then a wave 1 and a wave 2. So this is an Elliott wave nest. This is a very powerful setup. And this is a very powerful setup on a stock that's only been trading for less than a year, okay? From a shareholder perspective, the more recent the IPO, the higher the potential return. Obviously, the higher the potential risk as well. Okay? So, bottom line, this is an Elliott wave nest. We go 1, 2. We go 1, 2. Okay? That is the most powerful formation in Elliott wave theory because now we are going to go into a wave 3 of 3. This is a very powerful setup in my opinion. Wave 1, A, B, C, wave 2. We take the beginning of wave 1 with the high of wave 1 and the low of wave 2. We have really nice reactions on the median of the pitchforks. Okay, so as you can see, as soon as we connected this pitchfork, we had these really nice reactions on the median, and then boom, the median acts as a magnet and it acts as resistance, and now we're on the lower bound. The idea is that you buy on the lower bound, you sell at the median. So for Ride, we're gonna go wave 1, wave 2, wave 1, wave 2. We're getting ready for wave 3 of 3. We're going to go from the lower bound of this pitchfork to the median of this pitchfork. And in the shorter term, I think in the first half of 2021, we're going to see Ride reach 35. And that's honestly a pretty conservative time and price target because wave 3 is at minimum the length of wave 1 because wave 3 is actually 1.618 times the length of wave 1. So I believe Lordstown Motors right here at 20 is a very strong growth opportunity for long-term share investors, okay? I think as long as this low of 16 holds, then we are going to see Lordstown Motors be something that, you buy and hold and you set it and forget it, okay? And that's what I'm going to do. This isn't investment advice for anyone. I'm looking at Ride and Li Auto and Nikola and Acromoto as stocks that you can buy below 20 and sell at 100, 200 in the future, okay? If you think that's outlandish, go look at the Square Cash chart, go look at the PayPal chart, go look at the Shopify chart from 2015. It's not, look at the Tesla chart from last year, okay? If you're in a growth sector, you can make a 10 times return on your money through shares, okay? And that's what I'm trying to say. Electric vehicles are right now. Wave 1, wave 2, wave 1, Wave 2, I think in the very short term, next 4 to 6 months, we're going to see this wave 3 target of 35 get reached very conservatively, okay? Long term, this is a nest. This stock could go all the way to 80, 100 in the next 2 or 3 years, okay? So I think this is an opportunity that you could quintuple your money with shares just by having a longer term time horizon in the electric vehicle sector. And that's the other cool thing about being a long-term investor is you're not going to be, gaming every single correction, okay? As long as 16 holds as the low, I'm buying ride at 20, and I'm going to set it and forget it, okay? At the minimum, I think 35 is going to be reached in the first half of 2021. But I think long-term, this is a stock that, I'll have a chance to sell above 100, okay? And that's because we're looking at a wave 3 of wave 3 in the process. So 35 is a very conservative target, and then we'd be expecting that wave 5 would be at least the length of wave 1. So as long as 16 holds as the low, I think 35 is hit in the next 4 to 6 months. I think this stock is going to go all the way to 100 in the next 2 or 3 years, okay? Li Auto. This is kind of interesting. All 4 stocks that I've said, I believe are actually going to go to 100 in the next 2 or 3 years. I promise that I'm not just picking the big round number. But that's the general idea, is that these stocks are in the 20 to 30 range. And in the next 2 or 3 years, they're going to go to, the triple digits. Okay? So another electric vehicle company that I really like is Li Auto. I think this is a NIO right here. This is a Chinese electric vehicle company. It goes on a wave 1, forms a really nice pitchfork, and puts in a wave 2. So we take the beginning of wave 1, connected with the high of wave 1 and the low of wave 2. We had really nice reactions on the lower bound. We had really nice reactions on the median. And then boom, the median acted as a magnet. So this pitchfork is already perfectly valid. And now we're buying outside the lower bound of the pitchfork, and we're heading for the median of the pitchfork again. Okay, so I believe if you take the length of wave 1 and place it at the wave 2 low, Li Auto is going to go to 59 in the next 4 to 6 months. So in the next 4 to 6 months, I expect that Li Auto will go on a wave 1, 2, 3 higher. And this is a conservative target because wave 3 is 1.618 times the length of wave 1. This is just the length of wave 1 placed at the wave 2 low. So as long as this low of 23 holds as the low, I expect that Li Auto is going to go from the lower bound of this pitchfork to the median of this pitchfork. And this is just going to be wave 3. So remember, it's not just wave 3. We're expecting a shallow wave 4 correction and then a wave 5 higher for all these stocks. Okay? That's why, I'm saying that my price targets are conservative, because wave 3 is not only longer than wave 1, it's also not the last wave, because then we have a wave 4 correction, which is very shallow, and then a wave 5 higher, which is at least the length of wave 1. So I believe all these stocks are going to go from the 20-30 range to 100. Okay, and I believe long-term, Li Auto, honestly, this is the one that I'm most confident we're going to see at 100 in the next 2 to 3 years. Okay, we take the length of wave 1, we place it at the wave 2 low, and that gives us a conservative target of 59. So I believe in the next 4 to 6 months, Li Auto will hit 59 so long as 23 holds as the low. We're going to go to the median of this pitchfork, and we are going to go to 100, possibly 200 even in the next 2 to 3 years. I mean, if we look at NIO was $3 this time last year. Okay, it's 47 now. That's over 1,000% return. Okay, Tesla was about $150, $200 pre-split. This time last year, it reached 2,000, had a stock split, and now it's on its way back to 2,000 again. Okay, these electric vehicle companies, these small cap electric vehicle companies, this is our Apple, this is our Google, this is our Microsoft in 2000, this is our PayPal, this is our Square Cash, this is our Shopify in 2015. I think you buy this at 20, well, I'm buying this, no one's buying this but me, because this is an investment advice, but I'm buying this in all these stocks in the 20 to 30 range, but especially the electric vehicle companies. I think that we're going to go from 20, below 30 to over 100, even over 200 in the next 2 or 3 years. So as long as 16 holds as the low, or as long as 23 holds as the low, I'm buying Lee Auto at 28. I'm going to set it and forget it. Okay? Set it and forget it. And I think conservatively, this will be at 59 in the next 4 to 6 months. Okay? But long term, I want to hold this until it's in the hundreds, personally. Okay? Last one. This is the only stock where 100 isn't the long-term price target. Okay? This stock is a mammoth. It's Beyond Meat. Okay, so Beyond Meat, we're going to look at the shorter term time horizon first, and then we're going to look at the long-term picture and talk about why I'm so excited about Beyond Meat, why, a lot of people who practice wave theory, I think their eyes will light up when you talk about Beyond Meat, okay? We had an A, B, C correction to begin the year, and then we had a wave 1, wave 2, wave 3, wave 4, and wave 5 to put in a wave 1, an ABC correction to put in a wave 2, okay? So as long as 113 holds as the low, I think this is the one where a stop is most important because you don't want to see 113 broke and then, try to play pick the bottom. You really have to honor the stop here of 113. But as long as 113 holds as the low, I think we're going to go the length of wave 1 placed at the wave 2 low. And I think in the first half of 2021, definitely by the end of 2021, we're going to see Beyond Meat reach 263, okay? If you think that's, outlandish, it's just the length of wave 1 placed at the wave 2 low, okay? So wave 1, wave 2, if this low holds of 113, I'm expecting that we are going to go from the lower bound of this pitchfork to the median of this pitchfork. We are going to go from the length of wave 1 placed at the wave 2 low, and we're going to reach 263 possibly in the first half of 2021, definitely by the end of 2021. Now we're going to talk about Beyond Meat from a long-term perspective. I'm going to clear all of this. Okay, so as long as 113 holds as the low, we're expecting 263 to be reached possibly in the first half of 2021, definitely by the end of 2021, in my opinion. Okay, now let's look at the long-term chart of Beyond Meat and talk about why people might be so excited about this. Okay, so let's get our pitchfork out. This is the beginning of wave 1. We connected with the high of wave 1 and the low of wave 2. Very nice pitchfork right here. Okay, if you're a classical trader, you're probably going to recognize this as what we call a cup and handle. Okay, so this is a very, very big opportunity in my opinion. Okay, this stock, we're going to have our cup, and then we're going to have our handle. If you're a classical trader, you're going to call this a cup and handle. We're going to talk about the wave count on the long-term time horizon as well. But what we'll usually have with a cup and handle, we'll have this base, and then we'll have a bull flag from the bottom of this base. All right, so remember, this is the length of our wave 1. We're placing it at the wave 2 low, and that's how we get 263 as our 2021 target. Okay, we take the length of wave 1, we place it at the wave 2 low. Now let's talk about Beyond Meat from a long-term perspective. Okay, the whole reason that I got this out is because classical traders are going to call this a cup and handle pattern. Now we're going to get rid of that, and we're going to talk about the wave count. Okay, so this is a nest. We have our wave 1, our wave 2, our wave 1, and our wave 2. So this is the nest on the largest degree for Beyond Meat. Okay, this is our same low of 113. So I really love Beyond Meat as a shareholder if it's above 113, because we have our wave 1, wave 2, wave 1, wave 2. This is a very simple bull flag pattern. I think what we're going to see is we're going to go break above this high of 239, and that's going to be a big deal, right? Because in trading, the buyers are higher, and there are going to be a lot of buy limit orders right above this high of 239. This is also going to be the stop for a lot of bears. Okay, I checked the short interest on Beyond Meat. The Beyond Meat short interest right now is 35%. Okay, so that just shows that people are crazy, right? Whenever you ask who's shorting Tesla, it's the same people who are shorting Beyond Meat right now. They're insane. Okay, they're clinically insane. Okay, but we have our wave 1, wave 2, wave 1, Wave 2, this is going to be wave 3 right here. We're going to start wave 3 of wave 3. So this is where the conservative 263 price target comes. When we look at this, it's wave 1, wave 2, wave 1, wave 2. This is a very powerful nest, okay? I believe in the next 2, 3 years, 4 years at the absolute latest, we're going to see Beyond Meat in the 700 to 800 range. Okay, I believe Beyond Meat is going to quadruple and quintuple in the same way I believe that Lee Auto and Ride and Camping World are going to quadruple and quintuple. But the thing with Beyond Meat, it's a $125 stock. So I believe that this stock will go from 125 to 2-3 years from now. We're going to be talking about Beyond Meat at the 800 level. Okay, and there might even be a stock split in there. I wouldn't be surprised. Okay, so we go wave 1, wave 2, wave 1, wave 2. We've just completed an Elliott wave nest on a stock with 35% short interest. I am in love with Beyond Meat as a shareholder as long as 113 holds as the low.